So we listed a bunch of factors there. The market seems to be shrugging it off, at least right now in the pre-market. Futures are higher. In your mind, what's the biggest one of those things that investors should be mindful of and could potentially impact this market in a negative way?
So first and foremost, we obviously have to acknowledge there's a lot of the risks that have been reduced over the last couple of months, both related to geopolitics, fiscal uncertainty, trade uncertainty. I think when we look into the second half of the year, we're relatively constructive still. But Frank, probably the one thing we worry the most about is the same uncertainty that Powell was just highlighting before. That's a world in which we haven't really seen the impact yet on tariffs. We know that we're going to see an economic slowdown in the second half of the year. We don't know the extent to which we're going to see an economic slowdown. We also don't know to which extent inflation is going to hit. I think at the moment, the market is basically pricing a little bit of a dip down in growth, a little bit of a move up in inflation, but ultimately central banks around the world, including the Fed, that's going to cut interest rates. And that's an environment that global investors are just very appreciative of these days.
All right, so you're feeling fairly confident about interest rates, even though Jay Powell said tariffs really seem to be the roadblock stopping the Fed from doing it. I also want to talk to you about the dollar. We were just showing the dollar chart a second ago, down about 0.5% this week, at its lowest level since February of 2022. What do you think that means for the upcoming earnings season here in the U.S., and what does it also mean for global equities?
I think from a U.S. earnings perspective, obviously this is not bad for some of those international companies, including a lot of the tech names that are generating a good part of their revenues abroad, translating into something which is quite constructive on a dollar note. So that means that for our global investors and our portfolios, we lean into AI-related companies, many of which are located in the U.S. And we also think that the U.S. equity market is likely to outperform some of its European peers. Emerging market is another region that we like in this type of environment, typically with lower rates, weaker dollar, again, translating into a very solid earnings growth. And conversely, in places like the UK and broader Eurozone, where some of those headwinds are going to come now with a stronger euro in particular, but also a European central bank that's very likely to be at the end of its cutting cycle for now.
With all this in mind, where would you put money? We're going to hit this a little bit later in the show, but the S&P equal weight's kind of broken out. Where do you see the real action in the market? Is it in mega cap tech? Is it in the small caps, perhaps? I'm talking U.S. here. Is it perhaps just keeping it in momentum stocks, names like Palantir that have really moved the market higher? Is it in industrials that have powered the market higher? Where do you see the biggest opportunity as we look at the second half of the year?
So when we look into the second half of the year, and apologies for sounding like a broken record here potentially, we do think that AI is just the game in town over the next couple of years. So that's one of our transformational investment opportunities that we keep talking about. When we look at U.S. companies specifically, we haven't broken sort of the 10% adoption mark of AI when we survey companies. So if we go 6-12 months back, that number was around 5% of companies using AI. Now it's close to 10%. That number is only going to go higher. So AI and tech is still a place that we really like to look at. Power and resources is another one. So a lot of the companies that are benefiting from this AI transition, so companies that can, help create, the metals that are going into sort of these processes, more efficient use of electricity, et cetera, battery developments and so forth. That's something that we find very appealing as well.